Biden's new rule for homeowners that's going to
federal
affect
rule
tomorrow
on mortgage
is
rates
all
kicks in
about
tomorrow, and it may have you paying more if you have a high Congress is here to explain it. There's this claim going around that people.
Unless you've been living under a rock for the last 2 weeks, I'm sure that you've heard some drama about President Biden's new mortgage redistribution plan. So I'm going to cover all you need to know about it and how it will affect home buyers here in Columbus and elsewhere. What's up, everyone? It's Ryan Miracle, your favorite lender here in Columbus. Now, as I cover these ins and outs, let me know what your thoughts are below. Admittedly, only some people watching this video have much experience in the mortgage industry, so let's start at the bottom and work our way up to the top. So there are 3 different companies competing for your mortgage business, and that's Fannie, Freddie, and Ginnie. Now, all of these are competing businesses like Pepsi, Coke, and Tab, and that really shows you how old I really am. Now, for the longest time, Ginnie Mae, a parent company for FHA, USDA, and VA, was the company that served the home buyers who needed the most squish when it comes to home loans like lower down payment or lower credit. Now, Fannie and Freddie, on the other hand, conventional loans were the place where better income and better credit home buyers can find a home. Well, starting after the 2008 meltdown, the entire mortgage industry tightened up and the overall mortgage health skyrocketed as people were paying their mortgages on time in record numbers. Now, fast forward again to 2020, where rates dropped and the refi and home purchase boom exploded. Now, around that time, Fannie and Freddie lowered their down payment requirements from 5% to 3%. And this was a huge move to try to take first-time home buyer business away from FHA, which has always been about 3.5% down. So as a result of everything that's happened in the economy, the moves that Fannie and Freddie are making, FHA started seeing less volume than they had ever seen before. So they responded to Fannie and Freddie's move by dropping their private mortgage insurance, or PMI, to 40% off, making the monthly payments on FHA lower than they have ever been. So as you can see, a mortgage arms race is happening and home buyers get to benefit. Like I said before, some of this stuff needs to be clarified. So before we can take another step, let me know in the comments what questions you have about what we've talked about, and I'll do my best to answer them quickly. Now let's get to the reason that you're watching this video. Did President Biden plan on charging higher fees to those with higher credit scores? Before we can get there, you need a base understanding of what LLPAs are, or loan level pricing adjusters. You and I know that for the longest time that if you have a lower credit score, you should expect to pay higher fees. But really, why is that? The main reason is the entire banking industry, and specifically mortgage, is based upon measuring the risk of Joe Smith paying back the money he borrowed to buy his house. To offset the risk that the bank is taking, they make micro adjustments to the mortgage rates. Now, there are about 30 of these adjustments, or LLPAs, that can be applied to any home buyer. Things like good credit scores or bad credit scores, how much they are putting in down payment, and if they're going to live in the house or rent it out. And another big one that most people don't realize is the house, a condo, or a single family. Most people need to realize that Fannie, Freddie, and Ginnie constantly adjust these loan level pricing adjusters. For example, in 2022, Fannie and Freddie made it more expensive to buy rental properties using their loans. They did this to reduce how many investment properties they had on their books so they wouldn't get burned again like they did in 2008. Also, recently, Fannie and Freddie made it more expensive for lenders like me to sell loans to them. So our fees went up as well. They did this because of new requirements put on them by Washington, D.C. Now, getting back to the task at hand with Biden's mortgage plan. Remember how I said earlier that Fannie and Freddie lowered down payment requirements to attract first-time home buyers? Now, around that time, Fannie and Freddie lowered their down payment requirements from 5% to 3%. See, told you. Well, back in March of this year, Fannie and Freddie announced that they were capping the fees that first-time home buyers would pay. Well, this money still has to come from somewhere, so they shifted the fees that they would have gotten from first-time home buyers to people who are putting more money down. In reality, these changes are being driven by FHFA as a business decision, and the Biden administration signed off on them. But do you think that the sitting president has proven himself to be fiscally illiterate and understands these changes that are happening? So it's my guess that he really didn't know these changes were happening, but conservative media use this opportunity to make him look bad. One piece that no one really is talking about is these changes are putting more responsibility onto mortgage insurance companies. Now, if you look at the chart that you can see on the screen here, you can see that the biggest changes are happening for home buyers who are putting almost but not quite 20% down. These people will still require mortgage insurance, which will drop quickly after they move in. This leaves Fannie and Freddie exposed rather quickly after closing. So as property values continue to rise, home buyers are opting out of PMI faster than ever. This is a reminder that the mortgage insurance is there to make the bank whole if the home buyer stops making payments on their home loan. So you can see in the chart that the people who are taking the biggest hit are the people who are putting 15 to 19.99% down. So let me know below how you think this is going to impact home buyers all over the country. So how is all this going to shake out? Well, hopefully with the adjustments made by Fannie and Freddie, we will allow more low income and low down payment home buyers to have a shot at buying a home, which is never a bad thing. Yes, it's going to cost the more affluent home buyers a tad more, but based upon a study done by Fannie Mae, they only expect the impact to only be about $10 a month when you factor in the rate changes and the PMI payment. So is this socialism or a grand mortgage redistribution plan by the president? Not likely. But the bigger issue is spending and printing of dollars coming from Washington. However, with the headlines and the news coverage alone, 27 states have stepped in and started pushing back on Washington to roll this thing all the way back to the way it used to be. So once again, I don't trust our leaders to dig into the weeds, but instead latch on to the headlines so they can get their 30 seconds of fame on TikTok. So there's also some pushback on different parts of this change within the mortgage industry. Thankfully, Fannie and Freddie have given us until August 1st to make our case. So how is this whole thing going to shake out is yet to be seen. But I can tell you that as a species, we love to read sensational headlines. They were capping the fees for first-time home buyers that, well, back in March of this year, Fannie and Freddie announced that they were capping the fee. Well, back in March up and the other. Well, starting after about 2008, starting after the 2008 meltdown. So if you guys want to sit over there or stand over there in the corner, sorry, I don't mean to put baby in the corner. No, you're good. So they didn't get burned again, just like they did in 20. Oh, fuck.